In 2008, if you had £10,000 sitting safely in a UK bank, and that same £10,000 had been placed into a strange new digital experiment called Bitcoin, would you be financially secure today or financially ruined? This isn't just crypto versus currency. This is about the UK middle class, about savings, about inflation, about trust in the system. Today, we're comparing Bitcoin versus pound sterling across three defining years: 2008, 2020, 22, and at the end, we'll answer one uncomfortable question: which one actually protected wealth? Chapter 1, 2008, Crisis, Collapse, and the Birth of an Alternative, the Global Financial Crisis. UK banks were on the brink. Confidence was shattered. Governments stepped in. The Bank of England slashed interest rates. Money became cheap. Quantitative easing began. Savings accounts. They stopped rewarding savers. And then something radical happened. In October 2008, a mysterious figure named Satoshi Nakamoto published a white paper. No banks, no central authority. Fixed supply, 21 million coins. In January 2009, Bitcoin was born. At the time, nobody cared. It traded for pennies. It was a nerd experiment. But here's the key. After 2008, the pound survived, but purchasing power quietly began eroding. Inflation averaged around 2 to 3% over the next decade. That sounds small, but compounded over time. Pound 10,000 in 2008 did not have the same buying power in 2018. Meanwhile, Bitcoin, if you had somehow bought £10,000 worth in 2010, 2011, you'd be sitting on millions today. But let's be fair. That wasn't wealth protection. That was speculation. Bitcoin wasn't stable. It crashed 80%, multiple times. The pound was boring, predictable, trusted. So in 2008 to 2015, the pound sterling preserved stability. Bitcoin offered extreme upside and extreme risk. Round 1 depends on your definition of protection. Chapter 2, minus 2020, pandemic. Money printing and asset explosion. Fast forward to 2020, COVID hits. Lockdowns, economic freeze, panic. The Bank of England launched massive stimulus. Interest rates dropped near zero. Billions were injected into the economy. Globally, the Federal Reserve did the same. The result? Asset inflation. Stocks surged. Property prices jumped. And Bitcoin exploded. From March 2022, late 2021, Bitcoin went from roughly £4,000 to over £45,000 at its peak. Meanwhile, what did the pound do? It remained stable nominally. But something important was happening beneath the surface. Money supply was expanding rapidly. When more money chases the same goods, prices eventually rise. At this moment, Bitcoin's narrative shifted. It was no longer just a tech experiment. It became digital gold, inflation hedge, protection against money printing, and millions of UK investors believed it. If you held pounds in savings accounts, earning near zero interest during 2020, your money was quietly losing future purchasing power. If you held Bitcoin during the bull run, you dramatically outperformed. But here's the twist. Protection is not the same as performance. Because what came next changed everything. Chapter 3, 2022. Inflation shock and reality. Check inflation in the UK surged to multi-decade highs. Energy bills skyrocketed. Food prices jumped. Mortgage rates climbed. The UK middle class felt squeezed. The pound struggled, especially during the mini-budget crisis, briefly falling sharply against the dollar. Confidence wobbled. Now, ask yourself, if Bitcoin was truly an inflation hedge, 2022 should have been its moment. Instead, Bitcoin fell over 60% in 22. Risk assets collapsed. Crypto exchanges failed. Fear dominated the market. At the exact moment people needed protection, Bitcoin behaved like a high-risk tech stock. Meanwhile, the pound, despite losing purchasing power, remained usable, liquid, accepted everywhere. Your salary was still paid in pounds. Your mortgage was priced in pounds. Your groceries were bought in pounds. Bitcoin did not replace the system. It reacted to the same liquidity cycle. And this is where the debate gets serious. Wealth protection versus wealth multiplication. Let's separate emotion from math. Wealth protection means preserving purchasing power, low volatility, predictability during crisis. Wealth multiplication means high upside risk, tolerance, long time horizon. From 2008 to 2023, the pound lost purchasing power gradually due to inflation. Bitcoin delivered extraordinary long-term returns, but with brutal volatility. If you needed money in 2022 for bills and emergencies, Bitcoin was dangerous. If you had a 10+ year horizon and emotional discipline, Bitcoin dramatically outperformed. So, which protected wealth? It depends. Short-term stability gives the pound long-term asymmetric upside. Gives Bitcoin. But there's a deeper psychological truth here. The UK middle-class pain point, the real issue, isn't Bitcoin versus pound. It's this middle-class savers who kept cash in banks for 15 years saw low interest rates, rising living costs, housing becoming unaffordable. They played safe and still felt poorer. That frustration is what fuels crypto adoption. Bitcoin isn't just an asset. It's a protest against monetary policy, a bet against endless money printing, a hedge against central bank decisions. But it demands emotional strength most people don't have. Because when Bitcoin drops 70%, most investors panic and sell, and protection disappears. Final verdict: which one actually protected wealth? If you define protection as never losing 60 to 70% in a year, gives the pound wins. If you define protection as outpacing long-term monetary debasement, gives Bitcoin has a strong argument. But the smartest answer: it was never either or. The investors who truly protected wealth kept liquidity in pounds located. A calculated portion to Bitcoin, held through volatility, voided emotional decisions, diversification, protected wealth. Blind faith in either system did not. Closing line powerful, ending in 2008. The financial system cracked. One path chose stability, the other chose rebellion. The pound offered safety. Bitcoin offered escape. The real question isn't which one is better. The real question is, do you trust the system, or do you hedge against it?